Hey guys, welcome to the Rat Grind channel. Thank you so much for joining me today. I hope you had a wonderful weekend, wonderful Sunday. I sure did. I spent a lot of quality time with my family. Like I told you guys yesterday, I was bringing them for a Civil War reenactment event. So that was really really fun for my kids. They were able to march around with the soldiers, both Confederate and Union Army, and we watched the battle. And like shots fired, cannons fired. It was a really good time for me and the family. So I hope you also had a great day. So if this is your first time joining us, welcome to the channel. Like I told you guys in yesterday's video, the first few minutes of the video, I'm going to give you guys an overview of some of the topics that I'll be covering throughout the video so that you guys know already what to expect. And if that's something that you're interested in, feel free to stick around. If it's not, then I don't want to waste your time. I'm sticking around if it's not the video for you. All right, so let's get right to it, guys. So welcome to episode 31. Today is May 20th, 2018, and it's a Sunday. So some of the crypto market and ideas that I want to be able to share with you guys was the crypto markets grew to about 390 billion today, right? So we've been teetering around that 360, 370 after that massive or mini bull run that we experienced a couple weeks ago, when it was close to almost half $1 trillion, and went all the way down to less than almost 350, 360 range. So it's been teetering off, and it's been just right there. So it's growing steadily. So we'll talk about that. The other thing too is Bitcoin and Ethereum are still holding steady, similar to all the other altcoins. Usually what happens is Bitcoin or Ethereum goes up and the altcoins dump. But this time, pretty much most of them are holding steady, especially Bitcoin and Ethereum. And some of the articles that I want to be able to share with you guys that are not necessarily news, but just ideas that I want to be share with you about the blockchain and crypto spaces. The blockchain, excuse me, that the blockchain is what will fix the internet. I was reading up on an article about that, and also why the crypto may spike in Iran, the values of it, the interest, and why millennials are primed for crypto adoption. So some of the next things are the bear and bull news that I want to share with you guys. I want to talk about a little bit. So ICOs, initial coin offerings, are headed out of the United States. That's not great for us living in the US, because of the opportunities are leaving us. Also, Tether mints another 250 million new USDT, being a stable coin. It's seeming not to be that. So we'll talk about that. And then there's more crypto involvement from Goldman Sachs. So these are more great bullish news from the investment space in general, also Wall Street. And there was news about that Wall Street crypto trading is very, very eminent soon. And the last bit of news that I want to share with you guys is Vitalik Buterin, the founder of Ethereum, leaving it. So that's what we're going to be talking about, guys. So stick around. So let's get right to it. So welcome back. So the first thing I want to talk about is the market in general. So as you can see, the total market cap right now is at about $391 billion. I apologize yesterday. I keep saying thousands because my brain just doesn't add all the zeros, the lines of the extra digits. But it's $391 billion, and the 24-hour volume is actually down. It's less than 10 billion today on live coin watch. We're gonna go check out crypto market, crypto coin market cap, so we could be get a little bit more accurate here. It's $16 billion is the 24-hour volume. Like I told you guys, coin market cap takes into account a lot more of the markets than live coin watch. So this might be a little bit more of an accurate prediction for you guys to look at, not necessarily live coin watch. I just like live coin watch because of the fact that it gives me a lot of these options, like all-time highs, 1 hour. It updates every 2 seconds, which Coin market cap does not. So that's one of the reasons why I like this in particular. It makes my job easier, and as far as looking at investments, right? So Bitcoin, as you can see right now, it's trading at $8,500. So it's growing steadily. We've been watching this for the last couple of days. So that's really good sign. And Ethereum, it's at 713, and all of the cryptos is pretty much in the green. One of the major things that happened in the space today is, as you can see, Tron. You see right here, Tron broke the top 10 with over $5 billion in market cap. That's really good. It pumped 14% today, just in the last 24 hours. So that's really good news to Tron. To those of you that are invested in Tron, congratulations to you. There's a lot of great bullish news that are coming out on Tron. So that's most likely why it's been doing that. So let's look at the chart, guys. Excuse me, let me just get a sip of water here. So as you can see, we're looking at the trading view, the Bitcoin to dollar pair on Bitfinex right now. This is the 4-hour chart. It's trading at 8,500, like I told you guys. And as you can see, in the last couple of hours, it has a really good bullish trend going on, right? As you can see on the 4-hour chart, it's trading well above the 15-day exponential moving average line. So that's really good news for the fact that we had this considerable drop, and I see this as a break in that bearish pattern, guys, because it's held up above this trend line for the last couple of days. So that's really good news, considering that it is a Sunday. We'll see how this all works out. Right now it's about, I think it's about noon in Asia, so that might be one of the reasons why a lot of this volume is going into a lot of this growth is going into Bitcoin right now, because of the fact that maybe Asia is right there, buying it up. But as you can see, it's still getting a lot of major resistance right here. There's longer wicks on the top that is sort of pushing it down and keeping it here, keeping it within this, under $8,600. So we'll have to watch and see this, guys. Let's look at the 1-day chart. All right, so let's check it out. So that the 1-day chart right now, let's put it on log. As you can see, the 1-day candle, is still trading below the 15-day EMA on the 1-day chart. So it's still getting rejected. We needed to move above this 15-day EMA. Once that happens, we want it to bounce back down, right? So we want to be able to see it hit above this line right here, and then hit this, go up, and then bounce. That you'll see the wicks extending below this, but the body of the candle not actually dipping below the 15 EMA. So that's what we want to be able to see as one of the indicators that we are continuing that bullish trend, right? It's getting, like I said, a lot of good support level once it passes this line like it did before. But again, right now it's acting as a major resistance. So like I always say, good resistance becomes good support once you're able to break through and bounce off of it. We're still way far from the 10,000 level, but we may be able to see what happens tomorrow. What I'm hoping that doesn't happen tomorrow is when the US market gets back into the business, when a lot of the traders get back tomorrow and see the price gone up, they might think, oh, I made a little bit of a profit, and take those profits out, and then that will cause it to dip again. So I hope that doesn't happen. I hope that the traders out there, please, look at it. We are in a much more bullish sentiment overall in the market, and I hope you guys can be able to be patient and see it through and be able to get those confirmations before you guys take profits. All right, so let's look at the Ethereum pair, Ethereum USD pair right now. All right, so the Ethereum pair is actually, wow, it's also getting major resistance here. We've been looking at three green candles in the last couple of days, but today it's actually there's not much price action that's happened today. As you can see, it was fighting up and down, and the wicks are actually long. So the good thing about this is, as you can see, this long wick right here, somebody bought it up, so it pushed the body, but the body is really small, as you can see here. Let's look at the 4-hour chart. All right, so the 4-hour chart currently is consolidating. It looks like it's bouncing again above the 15-day EMA. So we're gonna see if that is able to continue this this flag pattern here and be able to break through this this resistance level here above 740. So if it can do that this week, then we could be able to get back into this bullish trend that we've been experiencing over the past couple weeks that sort of got broken down towards the beginning of this month. Around the 5th of this month was when we were experienced this downtrend again, right? So right now it already broke pattern, as you can see. If we chart this, so multiple touches right there. Okay, one touch here on the red candle, 2, 3, and so it broke through that trend, that downward bearish trend right there. So it's currently forming higher highs and lower highs. So that's what we want to be able to, higher highs and higher lows. So it's been able to make that that leap, as you can see here, right? Higher and then higher lows and then higher highs again. All right, so we're gonna try to see how that pans out in the next couple days. We'll keep watching that and we'll keep you guys posted. All right, so let's get into some of the articles that I wanted to share with you guys. So the first one is this article by Andreas Sandre. He wrote this actually yesterday. I wasn't able to read it until today, when I was just waiting for my kids to get ready to go to the event that we went to. It said that the internet is broken and blockchain can fix it, right? The CEO, Joe Lubin of Consensus Ethereum Summit, focused on security, disintermediation. He talked about Web 3.0 and Web 4.0. So really the major problem that's with the internet right now is security, because the internet was built and was sort of put together with very naive sentiments, right? We just wanted to decentralize information. We just wanted to be able to give out information out there. The data scientists, the internet pioneers just put it together with the hopes that everybody would act appropriately and act responsibly on the internet, but that's not currently happening. So security measures, identity is being stolen on the internet. So that's something that the blockchain can potentially be able to fix, because you don't have to, first of all, identity, you could be able to hold your own identity and not have to release that to the providers or to the websites that you're currently using. Like, imagine going on Facebook, you'll never have a reason to give them more than the necessary information that you don't want to be able to share. And you can control that data. You're not actually having to, basically, they'll access all your data, and then from there, you can choose to delete or not allow them to access certain data. From the get-go, when you allow them to access your identity online, you can already block them from the get-go from accessing information that you're not comfortable sharing, right? So he's saying that blockchain is going to be a revolution in the IT security, because every transaction against your infrastructure is a strongly and cryptographically authenticated and as well as granularly authorized. So that's what happens within the blockchain. See, there was a good chart that one of the slides that he had was the Web 1.0 was basically images, text, and hyperlinks, right? That's when basically you had web pages that had hyperlinks. Basically, you don't really think about them as hyperlinks anymore. Everything is just a link, right? Whenever you get to click, like this one right here, that's a hyperlink. Before, everything was static. You had to manually code, like target, a new browser, target, and then you would put the whole URL, the whole address of the page that you wanted it to link to. And then you had images and all that stuff. So that was cool. That was back in the early 90s, right? AOL 14K modem days. And then Web 2.0 came out. That was when we started having e-commerce, transacting, databases, being able to collect data on the internet. So that really revolutionized everything. Being able to access the internet on your phone and all this stuff. And then Web 3.0 is basically where we are right now, when like an Ethereum layer is being built on top of the internet to be able to allow you to build dApps, decentralized applications, on top of the current internet space that we have. One thing that will be the future, as talked about in this particular article, is Web 4.0, when artificial intelligence takes it even further, when a lot of these a lot of these bots and AIs are able to basically predict some actions that you're going to take, and is able to add another layer of experience on top of the Web 3.0 layer that the blockchain, Ethereum, virtual machine, and Ethereum network is currently doing. The thing about the current web is, in a way, the information is decentralized because basically you have access to almost everything, right? But think about it. Every time you search through Google, you sometimes see those results like, oh, this result has been removed for different reasons. And that means that somebody, although the idea of the internet is decentralized, is still controlled by one party. It's not decentralized in reality. So that's what the blockchain will change. It'll allow everything to just be transparent, right? So, of course, there's going to be good things and bad things about that we'll have to learn. But I think we're taking the best precautionary approach to be able to determine what those would be and make the right decisions to be able to implement them and take advantage of them. So I check this out. Just go to Hacker Noon, check this article out from Andrea Sandre. Just type in "the internet is broken and blockchain can fix it," right? So the other news that I want to share with you guys from Crypto Daily is why crypto popularity might spike in Iran. If you don't know, I mean, I'm sure if you live in the United States, there's a lot of these back and forth political talks that have been going on about the United States pulling out of the trade deal with Iran, if they nuclearizing all this stuff. So that is one of a catalyst for why this particular article developed by Robert Johnson thinks that crypto will become popular in Iran more and more. As it said right here, and I think it reported it a couple of videos ago, that in Iran they've spent $2.5 billion on cryptocurrencies in the last couple of weeks, and that is because, let me show you guys. You go read this news by yourself. Why, just Google it on Crypto Daily, why crypto popularity might spike in Iran. But I want to show you an interesting chart. So I was checking out the currency chart. This is the Forex chart for the Iranian rial. As you can see, if you look at this chart, wow, look, can you see that? In April of this year, it took a dump. Look at that. That's a heavy fall. And because of that, a lot of the money that's being used, the value of the rial in Iran has gone down significantly compared to the US dollar. So the value, the amount of transactions you can be able, the amount of products you can be able to buy with your rial is relatively low now. Excuse me, compared to the US dollar. So if you buy into cryptocurrencies, because it's it's a lot more stable, although it's volatile. It's very volatile. So you have to trade, you have to manage your risk, but a lot of these Iranians are being able to see that cryptocurrencies, although it's volatile, it's on an upward trend, as opposed to the rial has been on the downward trend since last year. Let's look at the 5-year. Yeah, wow, this is insane. Let's look at the 10-year. As you can see, for the last 10 years since 2009, there has not been a time that this has been on an uptrend. So it's been going down ever since. So that's the reason why a lot of the Iranians may find more value in the cryptos in the near future and today even, right? So then another idea that I wanted to talk to you guys about, this article, that more millennials use Bitcoin marketplaces like Paxful to invest in the cryptocurrency markets. The reason is because a lot of the millennials now, they've seen the abuses of the banks. They've seen, they've seen the crash of the markets where, a lot of their parents lost their houses, and then the governments bailed out a lot of these companies that were basically stealing money from the consumers. Basically, you do something bad, and then the government will bail you out. So a lot of these millennials are more aware of the positive nature of cryptocurrencies and the underlying value that it provides. So because of that, it's more attractive to them because there's a lot more growth. Although there's a lot of risk, but a lot of the millennials are still young, right? So they're able to manage the risk. They're able to take opportunities that maybe some of the the previous generation, the Gen Xers, and of course the baby boomers who are currently retiring, are not able to take advantage of because, of course, they're more, they're not as open to risk because they're going in for their retirement. So that's one of the reasons why millennials are better suited for it. And I mean, think about it. Millennials are used to pretty much not using cash. They're used to just swiping their cards, using PayPal, accepting money from Venmo, paying with their Apple Pay, Google Pay, Android Pay, and whatnot. So they're used to how the concept of internet money works. They just never actually had real, real internet money. And with cryptocurrencies, now they do. And a lot of times, a lot of these millennials, if they're not from the stock market, Wall Street type of industries, they don't really have access to a lot of these investments. And now they do. They're able to study ICOs. They're able to study like economics, looking at charts and stuff like that they've never been able to do before because, you know, I mean, let's face it, a lot of us are basically shut out of that market. If it's a different game. If you're like, they look at you, imagine if you go into Wall Street, you talk to a banker, you talk to some of these stock traders, they'll um oh, I actually hit the mute button, so I hope you guys heard that last part. Let me, if you missed some of it, I was just saying that on the millennials were better suited for adoption because they're just so used to transacting on their phones already, right? So it's not a new transition for them to get in on cryptocurrency and using Bitcoin and whatnot to be able to transact. So that's for that article. So read up on that particular article. It's on News BTC. Sorry, I accidentally muted the audio, the mic. So moving on to this article, you probably missed what I was talking about. Was the article says move them out. ICOs don't seem so scary outside the U.S. This is because outside of the U.S. there's less regulations that are trying to be implemented. There's a lot of countries that are more open to the idea of cryptocurrencies. Here, the SEC is trying to do something, the CFTC is trying to do something, the IRS is trying to define it as something. Different states are opening up, some states are closing down. So there's a lot of regulatory confusion that's currently going into the market. And for an ICO company, because a lot of companies no longer do IPOs now. I mean, back in the day, the .com days especially, doing an IPO was the thing, right? I mean, I worked for startups and I know it all too well that you set up a company, get it to be profitable. I mean, come up with an idea, get your seed money, build it out of your garage, get some venture capitalists, get to your A round, B round and C rounds, and once you make money, you take it public. Once you take it public, you IPO and you cash out and you walk away, right? Some do that, of course, not everybody. Like a Facebook and like the Snapchats, the Ubers, and all this stuff. They don't walk away. The company sustains itself, but generally speaking, a lot of the first, second, third, fourth employees move on to the next startup. That's what we used to do, right? And so today with ICOs, it's much more easier to get funding for your opportunity, right? Imagine if you just do an ICO and you treat it like an IPO. You basically go in there and build the product, build a business, and sell shares of it. The problem with that is then you're treated as a security because you're buying into the company. So then you're treated as a security. You're no longer treated as a utility. So the SEC will not allow you to do that because it will, even if you go through an ICO, it still treats you as a security, as if you did an IPO. So there's a lot of problems that go into that, and you can get fined, you can get shut down, the government can come knocking at your door. And part of this article, they said that I was reading that lawyers. Oh, yeah, here you will be spending between $100 to $300,000 per month so that you can get your attorneys to comply with regulatory request. So that's very, very bad for a lot of startups. So it's sad that it is happening, but countries like Gibraltar, Malta, and all these other ones, Switzerland, like I was reporting the other day, is being more open to cryptos. So it's giving more regulatory flexibility to a lot of these investment opportunities. So one of the guys said from this article, the last part is the U.S. needs to learn that in a globalized, decentralized economy, they are not the center of the universe anymore. So that's the fact of reality. I think the sooner we get to realize that, the sooner that we will lose out on a lot of these opportunities because money is leaving the country. The United States is no longer the center of investment. We don't basically produce a lot of the products that are used all over the world. That is one of the major problems. We don't realize it, but in World War II, the reason why after World War II, the United States became the most powerful country in the world was because the majority of the products were produced here. You may or may not realize that, right? During the World War II, everybody was fighting a war, including us, but we were never fighting the war in our own soil here in the U.S. So we had the capacity and capability to continue producing products that the whole world, the devastated world, from Asia to Europe, the modern world was destroyed, right? So they needed products to get their feet back. Building materials, clothing, food, all this stuff that were all produced, made in America that we went to ship out. But today, that is not happening anymore. In fact, in the US, we're the ones that are consuming everybody else's product from all over the world. There's so much waste here in the US that, it's sometimes hard to fathom how desensitized we are to the plight of for the rest of the world, right? That's why a lot of times we in America are seen as like insensitive to some other cultures in some other countries because we don't get to see what they go through. Like for me, for example, I grew up both in the US and in the Philippines, so I was able to see first world and third world problems from both perspectives. And the US just seems so like just disconnected in a way. I mean, United States presents a lot of great opportunities for all of us, But I think we need to be able to realize that we can't let these opportunities slip us, and they will go somewhere else, and by the time we realize it, it'll be too late, because again, the whole world has already taken over, because we are in a globalized economy, no longer a centralized one. So another big news today that is unfortunate in my opinion, but it depends on you guys. But Tether, USDT pairs, and we've been talking about US stable coins and other stable coins like the crypto backed by Circle cryptocurrency. I think it's called USD coin, that is backed by Goldman Sachs. It's a stable coin, right? So Tether mints or makes print $250 million worth of new USDT. USDT or Tether needs to be, the idea is one to one backing, right? For every dollar that is deposited, you have one USDT. So it's always one to one. But because of the fact that the audits have never been able to push through, so there's a lot of conspiracy theories on it being insolvent in a lot of ways. So there was, it depends on where you guys are in that particular spectrum. If you Google Bitfinex, he's really big on how Tether is basically cheating the crypto space by printing more and more USDT to go ahead and flood the markets. And the more they print, it devalues USDT. So we'll see how this all plays out, guys. So we'll keep a watchful eye on this. So like I was talking about, more institutional investors, Goldman Sachs's president will become its new CEO by the end of the year. So he's already very bullish. I mean, the president of Goldman Sachs currently, he was just elected president in the last, I believe, month or so, or 2 months or so. So for him, he's already shaking up the management of Goldman Sachs. He's already putting in place more crypto teams within Goldman Sachs, because they're looking for new opportunities to profit from, to make money from. And crypto, as they see it, is a new asset class that they can be able to capitalize on. They want to try to be the first ones there to be able to, be first movers in the market and take advantage of the opportunities that it presents, right? It says looking elsewhere for revenue, digital currencies. That's what they're asking. Goldman earlier this year made their first hire in the digital currency space, and they're looking at being able to expand this particular segment of their business. It, he said here, in terms of having trusted institutional players, it's been something I've been looking for in my own crypto trading, but it currently doesn't exist, right? They also said, in response to client interest in various digital products, we are exploring how best to serve them in this space. At this point, we have not reached a conclusion on the scope of our digital currency, digital asset offering. Coinbase is going at this, and now Goldman Sachs is going at it. Although Coinbase, of course, because they're primarily a crypto company, so it's obvious that, of course, that's they're moving within the space. But of course, a lot of these institutional companies, institutional banks, and Wall Street companies don't want to get left behind. So they want to be able to beat anybody to the punch and be able to be on the forefront of this new opportunity, this new asset class that everybody seems to be seeing a lot of opportunity from. Another related one was Wall Street cryptocurrency trading is eminent, as reported on Bitcoinist by former JP Morgan executive. So, I mean, what more type of news can we hear? JP Morgan was was always saying that, like, oh, like Bitcoin is scam and cryptocurrency are scam and stuff like that. And his former VP actually started her own. Amber Baldet is she I think she's from Clover, I believe. Yeah, Clover. They were the ones that were talking with Jimmy Sung, that were having a lot of arguments during, I think, the first or second day of consensus towards the end of the day. So basically, they're trying to develop a search engine for the blockchain ecosystem. So she said that She had a quote here. Oh, right here. Sorry. She said that, the project that she's working on, there's no way to discover what's out there right now. There's no Google for finding applications. The ability to discover apps is helpful, but the ability to build them is also encompassed in their Clover platform, because they believe in such um, big potential within the blockchain crypto space. So they're building a new search engine for it. And from somebody that um, leaves JP Morgan to start her own blockchain project, company, crypto company, it shows you why a lot of these people within the space, they know what's going on because they're insiders. They know what within the company, what they're talking about, and what opportunities are lining up for them. So they see these first and they capitalize on it, right? So that's really good. That's really, really good news for us overall in general, right? So the last bit of news that I want to be able to share with you guys for the crypto space is this particular tweet. I was looking at it on Ethereum's Reddit page, subreddit, and it was posted by Vitalik. He has I tried to look for it on his Twitter page, but he's deleted it. He probably realized that, hey, this was not really a great thing to share. But he basically shared that that he received an email from Elizabeth Garcia, one of probably the recruiters over at Google, that was following up with him on a potential job opportunity, right? So he was asking, should I drop Ethereum and work for Google? And he put a poll inside, right? At the time that he posted it, it received about 2,000 votes, and it was 59% said no, but 41% said yes. So, I mean, in my opinion, Vitalik doesn't really. I don't see him as being stuck with Google because Ethereum, like we were talking about a lot last couple of videos ago, I think Steve Wozniak said if you don't know, Steve Wozniak was the co-founder of Apple with Steve Jobs. He basically built Apple with, the first Mac with Steve Jobs in their garage. So he said that Ethereum could potentially be the next Apple, right? So if you're gonna leave, you know, Ethereum and join Google, you're basically going backwards, in my opinion. But of course, to each is his own. But as of right now, Vitalik has already deleted this particular tweet on his page. I mean, he put the Google employee's email address and put it on blast on the internet. So that might not be a great thing, but it's out there. He did post it, of course. If anything is in the internet, somebody's gonna capture it and share it like they did on this Reddit page, right? So that's pretty much it. That's the last cryptocurrency um, news that I wanted to share with you guys today. But before we end this video, I just wanted to share one more thing. As you know, I'm not only investing in cryptocurrencies, but I also do trading on Robinhood, right? Which I usually do during the weekdays. I update you on my position. I'm currently holding a silver position, USLV. Um, that I carried over through the weekend. I want to see what happens tomorrow. And of course, I want to prepare myself for what's going to happen in the market. So I read this news on the New York Times today. It was actually news from yesterday, but I wasn't able to read it. I just got a chance to see it today. US and China tout that trade talks were successful. But of course, they had to leave details for later. One of the key things here was China was prepared to make up to $200 billion in additional purchases from the United States. Basically they're basically gonna consume more like energy products and other products that the U.S. offers to be able to, I guess, leverage that opportunity and work together with the United States instead of having a trade war, more of a trade cooperation between the two. Because in the U.S. we do consume a lot of a lot of Chinese products. Let's face it, a lot of the products that we consume today were made in China. Not that that's a bad thing, guys. I mean, realistically, if you are a reputable and smart business person, there's no way that you're going to pay, 4 times the cost of labor when you don't have to. Of course, we don't want like, cheap, bad products, bad quality products, but you know, something that a lot of people don't realize. They just say that, oh, where China is taking jobs away, right? Think about this. I work for a fashion brand where we have our own factory in China, right? And the reason that is, if we had set up operations here, we produce bras, right? And if you had to teach somebody in the United States how to properly mold those bras, sew them together, cut the fabric, it would take them years on years to be able to gain the experience to do it properly. But in China, they've been doing it for years and years. And basically, what happens is they just move from company to company, but they're doing the same trade. So, as far as the experience, think about it. Would you rather buy a product from somebody in the US who is paid a lot more, or buy it from somebody that does this and only this, like for the last 10 to 15 years, and from somebody in the US that's just been trained for, I don't know, a couple months? So you tell me what where the quality would be in that case. So that's something that you have to look out for. So the only reason I'm sharing this with you guys was, read up on it. Google it. New York Times, U.S. and China tout trade talks as success, but leave the details for later. I mean, I want to see the details, but it's just good that there's new cooperation between the US and China, which will hopefully bode well for both economies of both countries. And I'm going to look at how this plays out, because this is going to affect the opportunities that I'm trading in, not only on the crypto space, but as well as my Robinhood stock ETF investments. Gold could potentially go down when the U.S. economy goes back up. It could be because it's an energy play. These energy companies that are in China might see a lot more bump in prices, and the US ones will go down in prices. We don't know what's going to happen exactly, but it's just good to know that this potentially will affect the economy of the US and anywhere else in the world. And you want to be able to make the right decisions. These are sort of the little nuances of the market that we need to be aware of and track, so that we can be able to make the right decisions. So when we analyze opportunities, not only from a technical perspective, not only from just a numbers game, but on a fundamental space, if we're seeing that, oh, the chart is showing that this particular, like, gold is on a bullish sentiment, right? If we buy into gold, and all of a sudden there was a report that the U.S. economy has never been better since the last 10 years, gold will drop. It's just historically what happens. When the economy of the United States is good, gold goes down. When there's uncertainty within the U.S. economy, there's like job losses and whatnot, gold goes up because money is being moved to gold instead. So that is something that we just have to be able to watch out for. All right, guys. Well, that's pretty much it. I hope you enjoyed today's video. Please do share, subscribe, leave rating, leave me your comments, hit the notification bell as well, so that when I put out new videos. The comments that you leave are important to me, because it allows me to improve this channel and be able to give you the videos that you will find value in the most. So tomorrow's video, I'll get back into doing my Robinhood trading in the beginning of the video, so that you can see how that trading worked out for me, and then I'll give you more news tomorrow on what's going to happen. I'm very excited to see what's going to transpire in the markets in the next week or so, and I'll keep you guys abreast on what goes on. All right. Well, until I see you guys on the next video, I wish you and your family a successful day. Thank you so much, guys. Have a wonderful evening. Love you guys. Bye.